It's Joel Olson here coming at you another variable rate update. It's the week of July the 11th, so this means this coming Wednesday, Bank of Canada meeting for what is expected to be a 0.75% rate change. The market's already priced that in. It's very inevitable. Now, it's not a foregone conclusion the Bank of Canada always follows what they say they're going to do. In fact, it's not a guarantee at all. The last time in January, while they predicted to raise rates, they didn't do so. But I think the market has priced that in. There'd be quite a tailspin if they didn't do so. So 0.75% increase. We're going to be shooting a short video this week when that happens, just to let you know exactly the result. A few tidbits to be aware of this happened. First of all, we know that the job reports came out showing that Canada lost jobs. That's a huge reversal on what has been previously been the case. Two, we know that something that you don't see in Canada, but is very important to the story here, mortgage rates in the United States had the biggest drop week over week since the financial crisis just a week ago. And so that is, mortgage rates work a bit differently in the United States, but we have found there have been huge correlation between U.S. activity and Canadian activity, especially over the past couple of years with some of these things. So that's important to be aware of. Now, if I am scared after this week about my payment, look at it this way. We're going to go through a number of things we're going to re-summarize. It's a storm that will pass. And so what do? I could lock in my payment. I could stretch on my amortization. But what I most worry about is that people are focusing more on fixed and variable. People go, oh, I should have went fixed. Mortgage rates are higher. Mortgage rates are up. The cost of living is up. Inflation is up. This is part of a bigger picture. You should think about repositioning your situation more than you should worry about locking in your rate. Do I need to reposition my debt? Do I need to redo my other mortgages and my other loans or anything like that? Do I need to reevaluate where my income's coming in? Do I need to reevaluate my tax situation? These are the things you need to be thinking about over just adjusting the fixed and variable rate payment. How do I better my cash flow situation in something like that? So these are things. Now, if you need recommendations in the field, please do reach out. These are the things you ought to be thinking about because, look, even if somebody, let's say as you know, we are huge variable rate proponents, but what if someone took a fixed rate? A fixed rate inevitably would renew if you believe certain things at a higher rate. So that is important as well. So that's we have a whole bunch of videos on that. Rewatch those videos. That is important as well. Now, summarizing where they're going to go. If I believe that rates are going up in preparation for a recession, which is a likely conclusion, one that I subscribe to, then rates have went up to about the point that we had the financial crisis, with the idea that 12 to 18 months, rates would have to come down. Listen, it's not possible that rates would go up as a recession is happening. Rates would have to go down. That's a major tool that they stimulate growth when a recession happens. So if I believe that a recession is on the horizon in the next 6 months, moving rates down at that time, so I have a 12 to 18 month time period where rates are where they're at, and then moving them back down. Likely scenario. For the people that think in that scenario, go, well, no, we're just getting back to normal interest rates. Remember, these were the interest rates that we started from. Where we're at right now, these are the interest rates at the height of the last run on real estate and all type of things. These are what the interest rates were, and they moved back down to where we are today. So that's what I would do. So then I'm preparing for a 12 to 18 month time period, where I'm either saying these payments are okay, or I'm doing the things that we just talked about. Now, if I believe that the government is either incompetent or they are strategic in moving rates up with the idea that this is going to cause some damage to Canadian households, or I believe they're doing it strategically, there's a few things I can also consider. So if I think interest rates will be up for some time, first of all, you need to be aware that a lot of people in the financial world are talking about, what a market should do or what would, this will cause markets to do. But what they really forget is the tampering of the market. And what I mean by that is that a fixed rate can be manipulated. through quantitative tightening or quantitative easing, governments can buy bonds, changing the cost of bonds, changing fixed rates, and all that type of thing. And so what I mean to say on that is, even though a market should behave in a certain way, it may not, with intervention and people both behaving in a way that's not smart, incompetent, or strategic. All that type of thing can change things. We know in the past few weeks that it's well publicized that the vast majority of politicians, both federally and provincially in Canada, own residential real estate and hold that as part of their investment portfolio, and actually hold that as the vast majority of what they're holding their wealth in. Do you think it's possible that they will desire some type of housing crash? I don't think so. Remember, this goes across party lines. Regardless of party affiliation, this is what they're holding their wealth in. I think that something that people are not considering right now is you're going to have interest rates go up for the time period, create an opportunity for some investors to pick up some real estate, have interest rates go back down, because that makes things cheaper for everybody involved. And then I think that I think you'll have some more government programs that get initiated into the housing market that may or may not be a good idea. So that's the play on that part. So don't be distracted with a fixed and variable conversation. Like this is in Canada, the housing market is what they want to prop up. This is in contrary to the United States, where it really is the stock market that they're looking to prop up. So that is an important point to be aware of. You should be way more worried about the fact that there is a loss of value to the dollar, and so as house prices go up, this is the dollar losing value. That's what inflation is: the dollar losing value. If something cost me $1, now it costs me $1.30, so I have less. My dollars do not go as far, and so I need to be making decisions and choices based on that as a whole, rather than worrying about just my mortgage. Now, not to say that we don't think your mortgage is important. Of course we do here. But this is part of the bigger picture. And I worry too many people worry about just that and not worry about all the other things that are involved. Like I heard someone this morning talk about, well, I'm not affected because I don't have any debt. Well, that's not true. You're affected by all the different costs of rising, whether that's food or energy or all those types of things. And so I need to reposition myself in that way. So it's going two ways, and that is important. And so no matter what I believe, those are the ways that it shakes out. Do I think there's a possibility that interest rates could keep going up and up and up? I really don't, because I think that no matter how diabolical something is, or no matter what you think, I don't think that benefits really anybody from that perspective, and I don't think that makes. And I don't think that's in the cards. So anyway, that's the very update for today. I want to spend some time, if you haven't gone through some numbers, we haven't had a chat about variable rate mortgages, or we haven't had a chat about your mortgage or restructuring things, don't be afraid to roll your debt in if you're thinking, oh, rates are higher. Rates are still not comparatively higher, and a lot of people are carrying 12-14% debts. Like that would be way better position. So I could re-amortize my mortgage, cheaper payment. Hey, maybe I'm looking to add maybe I'm looking at an income suite. Maybe I'm looking to add some rooms so I can add some extra income to the house. All those types of things could be things I could be taking advantage of. House values have not really seen a material change in most places. And so now is the time for me to reposition my mortgage in such a way where I'm going to take some equity out of things, and I'm going to make it work for me in the right manner. Not all those things would be a good idea. Some would be actually rather reckless. So as per usual, if you want to go through your mortgage, please reach out, and please do share this video with friends and family, anyone that you know, and subscribe to our channel. You'd really help us out with that. We'd love to help them with their mortgage needs as well.